What's up, traders? Matt from the Trade Brigade here doing a technical analysis on our trending tickers for the day. We're going to kick things off with Amazon. Obviously, the news here is the 20-to-1 split happening close to June 6th, I believe the date was. And in the post-market, if we turn that data on, what you'll notice over here is, of course, the fact that there was a positive response to that information. So it's very likely that we open on some sort of gap up for tomorrow's session, and we're opening at some pretty important daily levels. If we take a look at the daily time frame chart, you'll notice that the overnight high is roughly that $3,100 pivot, the top end of the balance from right around in here, and the forecasted opening print is very close to the low end of the balance at $29.85. So to me, we're just going to use those levels, right? And what we want to watch for is the inventory correction on the bell tomorrow morning. So although this is a positive catalyst and will likely get a lot more people involved in investing and trading Amazon, notably some options volume that should pick up here, although it's a positive thing, there is possibility that this is an overreaction. We get some inventory correction to the downside for the gap to start filling just a little bit. And as you guys know, we have a framework to trade this. So on the daily time frame chart, this is what it could potentially look like. If we open here, fail to take out the overnight high, trade lower, back down through the opening print, look for shorts to start to fill the gap to today's high of day, roughly 28.10. Now, I'm not saying the gap has to fill all in one day. A half gap might be sort of more appropriate, something somewhere in here, 2,900 maybe. That's one scenario here if we get inventory correction in the first place. Now, noting that this range is fairly large, I mean 100 points, right? I would be a little bit skeptical. I would not want to see it come anywhere close to the overnight high, and instead, what I would want to see is an open, a drive higher that fails much lower than the overnight high here, and then it's short under the open for some sort of move to continue downward, right? And that would just increase our risk reward ratio, right? Your stop goes over high of day, and the target ultimately is the gap close. But even if you go with 50%, this risk reward ratio still makes sense instead of risking this for, again, a half gap, something that might look like that, 1-to-1, not really that ideal. So that's Amazon in a nutshell here into tomorrow's session. If, however, this happens, so here's an interesting scenario as well. If we open here and accept above, then I would imagine that we go sideways for the day to slightly higher, not all the way up to the overnight high, but slightly higher. The reason I say that is because this could technically be a recapture of the breakdown point here and the prior balance. And if we just accept within, obviously sideways is the more likely outcome, but potentially a little bit higher towards the top end of the range. I don't really think it wants to immediately rocket up towards 3,100, but again, anything can always happen in the market. The probabilities would say watch for the inventory correction as the primary objective. Secondary objective would be acceptance here, probably just goes sideways, okay? So that's Amazon. That's our first one up on the list. Next up is CRWD for CrowdStrike. These guys reported earnings after the bell today, so zooming in on the daily just to get a sense for where we're kind of at from a roadmap perspective, just giving ourselves a little bit of an idea of what's going on here. I like this level in here as well. There we go. So that's going to do it for the daily roadmap. But in the after hours, where are we opening? What's kind of going on here? Clearly, move to the upside. Very likely that we get the gap up. Please remember that a lot can happen between now and 9:30 when the bell actually rings, but we'll assume it's a gap up for now. So as long as we can kind of hold up here, we're watching for almost the same exact scenarios, what we just discussed in Amazon, right? So if we open kind of, let's just say that the open's 193, kind of right in here, we open here, fail to take out the overnight high, trade short back down through the opening print to start to fill the gap. The gap closes to today's high of day at 171. We'll call it just for round number's sake. Again, because it's so large, do we expect it to fill all in one day? No, absolutely not. Especially if the broad marketplace is holding tomorrow, notably the QQQs, then watch for something like this, maybe a half gap fill to the 50 SMA, which is around 180. Just don't push your luck all the way, considering the size of the gap is ultimately what I'm getting at. Just like in Amazon, if it's going to be a gap and hold, we need to hang on to that 190, basically this prior resistance, which turned into a little bit of support in there before ultimately breaking down. If that just holds and we go sideways, then don't push your luck for the gap fill, right? The inventory correction on both CrowdStrike and Amazon, which we just talked about, needs to happen immediately on the open. Otherwise, it's not really in play, right? Gap fills and inventory corrections, if they're not shock and awe off the open type trades, then you probably get the sideways hold into the remainder of the day, right? So that's what I'm thinking here inside of CrowdStrike. If it takes out the overnight high, obviously this is your target in here, closer to 202, all right? 200 psychological is in there as well. Something to pay attention to, but you can clearly see structure is just a little bit higher than that. So that's CrowdStrike in a nutshell. Let's continue along. Next one on the popular list is ASTS for, of course, the space company. zooming in on this one, big sort of gap up and a lot of volatility on today's session. Someone can let me know in the comments section what's going on here, but I'm just going to stick to the technicals and of course keep it constrained to the daily roadmap and just looking at price action here. So what else do we have off to the left for resistance? Clear shelf of resistance there around 13. That's going to kind of do it. Maybe this, we'll see how that aligns with the 30-minute in just a second here. We're going to turn after hours off. So from the daily perspective, let's talk about this candle first. Obviously, big gap up, a little bit of the gap filled, about 50% of the gap filled, right, from here to there. That's that range right there. And then you can see it was off to the races and a pullback into the afternoon. So the bulls are in control, right? Anyone who was getting long in this nice little up channel that was forming down here, handsomely rewarded on today's session. And if we think about, people who have been holding this for a while, anyone who was building on this pullback because they thought this was quote unquote the dip, and it was also right to this prior low, those people are now all sort of out of the woods, if you will. The only people who are still underwater are these people up here. So there is still some significant overhead supply. And I would really focus on $10 even. Once we can get back above 10 and start trading in this range, that would really confirm that anyone who wants to get out for break even had the opportunity to do so. And now any new longs entering are starting to build that new position, right? So that's where the new inventory is coming in. So that's ASTS Mobile on the daily. Again, needs to clear 10 to start feeling more bullish and more comfortable with that overhead supply. As of right now, just to sort of illustrate my thinking, right? These people are just bailing for break evens. That gives us that upper wick, and that's the selling pressure. If we can recapture 10, then again, that would prove that these people are kind of either done selling or we're getting new initiative buying activity up and over that, which would be bullish, right? So that's my thinking on the daily upper wick there from the 30-minute time frame. What else do we have in play here? Let's see. So this pullback area strikes me as interesting. I would want to know about this as well at 965 roughly. You can see it's the morning high, pullback, break, retest. For now, it's holding. In the post market, obviously, we're a little bit lower. We're 922, 930, but we'll see what happens with that level into tomorrow's session. Just to give you some ideas of things to be thinking about, if we open below and do something like this, what did I just draw, right? Technically, that is a head and shoulders pattern. Look for a flush underneath 850 to fill the remainder of the gap. That would be a bearish outcome. If we do something like this, so we open, let's just draw the open here. We recapture higher low off of it, something that does this, starts to produce that type of activity. Maybe that's the bullish recapture of 10, which we pointed out from the daily time frame, which would be needed for this to remain bullish. Okay, so those are two scenarios in AST Space Mobile. All right. Next up, what do we have? ASAN for ASAN. I believe these guys had earnings after the bell today as well. So let's zoom in on the daily. We'll give ourselves that daily roadmap. Then we'll talk more nuance as we pop on the after hours session to see what's going on with the number. I just want to get a rough idea of what's happening here in the company. There's a level here, it's probably a zone between 71 and what's that high in there, 75. Seems to be a little bit large. I'm just going based on prior support, then flipping to resistance, slightly higher high there. But nonetheless, if I zoom in on that, you'll even get the sense we resist early and then it turns into support. So I kind of like the 70, 80, 71-ish dollar mark better than just calling it a zone. Anyways, that's besides the point. Let's see what's going on with the number in the first place and if that's even in play. And the answer is clearly no, right? So it's very likely we'll gap down tomorrow and open on a true gap, but keep in mind a lot can happen between now and 9:30. We of course want to know where the overnight low is, the forecasted opening print, and today's low of day for the gap fill trade. So just like Amazon, just like CrowdStrike, we are looking at scenario number one being the gap fill. So that would be opening down here, failing to take out the overnight low, trading long up through the open to fill the gap up to today's low of day. That's 44.50, all right? And that's a pretty solid trade to take, right? In my estimation, there's plenty of deltas to be picked up here. Let's see how the options are actually on this one. If it's going to be doable via calls or we should just trade shares. Yeah, I would start to say that the options aren't fantastic. There's some decent volume here. But the spreads don't seem ideal. Maybe that's because they're pumped up from earnings. Yeah, I would probably just go with shares, to be quite frank with you. And it's even easy to borrow. So if it does come in for the gap fill and then reverses off of that area, so something like that, you could even opt to go short on the back test of 44.50 just via short shares. You won't have to worry about your options liquidity getting in and out there and the spread. So ASAN, watch for the gap fill first, especially if the broad market is looking bullish, and it is. You should go watch the video on the main channel where we do the sort of broad market breakdown as well as our core list of companies there. But regardless, this. If the market's screaming to the upside, I would watch for the gap and trap here, aka gap fill overhead inside of ASAN. If it's going to be short, just watch for consolidation down here. Basically anything that fails underneath 41 and you're skeptical in the first place, any breakdown of 38 overnight low should take us lower. And let's just quickly search for a target together on the weekly time frame. There we go. We're looking at this 34. So about a $4 move to the downside available if it gets consolidation on the open and then flushes 38 for a move lower. That's ASAN in a nutshell. Next up, NIO, NIO. What's going on with this guy? We'll go back down to the daily just to see it on a more granular level. Nice solid day off the lows today, to be quite honest with you. Recapture after a fake break. Notice that we had consolidation underneath for just a day, but we're back above. Let's take a look on the 30-minute time frame. Nothing really too impressive happening in the after-hour session just as of right now. We'll turn that off. And what you can clearly see on the 30 is this nice picture-perfect bull flag that was forming. I mean, it doesn't take, I could use my eyeballs. I don't need the Fibonacci's, right? You can clearly see we're well above the 38.2. But what I like about this little illustration though is the fact that prior resistance and support from right around in here is the 38.2. So it's coinciding from a fib and structural perspective. I love when that happens. So essentially any pullbacks that happen, as long as they hold 1975, fantastic. Things are looking great in NIO for a potential higher low and then a hook higher. In the post market and when we had the after hours turned on, you could see that we were slightly higher kind of in this area. So I would watch for either consolidation and then breaks like this or just sideways for the day. Play ping pong, longs here and then take it off up here. Short, potentially. I wouldn't be aggressive with the short, but I wouldn't call you crazy for taking it. Short here, looking for rotation lower. If we kind of open and do this activity in the earlier stages of the day, the broad market's kind of going sideways, that would be viable here inside of NIO. If it breaks out up and over that 2067 area, just target this high. You can easily see that's the breakdown high. It's where the majority of the stronger selling really stemmed from. So to me, clear that. Up through thin structure, you can see on the way down it was thin, on the way down here it was thin, on the way up it was fairly thin as well. There's not a whole lot of structure there, right? So a break of 2067 takes us into 2180s roughly, and again, you really want to see it hold 1977. If it doesn't, so if we do something like this, there's your lower high, flush point here, thin structure, same exact theory applies, right? On the way up, it was thin, easily should retrace it on the way down. First target would be the lows here around 1850, and then your 1750 from the true low, day of acceptance underneath the Tuesday session, obviously, on today's week. So that's NIO in a nutshell. Continuing along here, next one is LGVN, there we go. Long Everon, we've covered this one way in the past as it was going haywire back here. Obviously, we can clear up the drawing set. It's no longer really in play as such. However, nice solid move on today's session. Big volume coming in as well. Again, let me know in the comments section what kind of news event was driving this. I'm going to keep it technical here and not go searching for that actual article because at the end of the day, my belief at least, is that price action will tell all, right? Price action is the bearer of all good and bad news. And it's really, if you focus on price action, you'll never be lied to, right? So there we go. Resistance trendline was what I was trying to get on the chart as I was discussing that. And you can clearly see we peaked up above it on today's session. Because that's now broken, there's potential for it to rotate up towards the top of the anchor point, especially noting that it's a fairly mild resistance trendline. That number is 850. Is anything happening here in the post market that we should be aware of? And the answer is absolutely. Yes, there is continuation here in the post market. So that is going to put into play inventory correction, right? Just like we talked about in Amazon, CrowdStrike, Asana, the same sort of idea applies, right? We're always using this framework when it comes to gaps in the marketplace. Could be a gap up, could be a gap down, doesn't really matter, right? So here we go. On the daily time frame, this is what you're going to watch for. If the forecasted open is technically around $8, which it does look like it is as of right now, you're watching for any failures to take out that 850, then short through that open to close the gap to today's high, basically 710, okay? So the short trade is this. That's what you're watching out for. If we get something that does this, and then we get acceptance put in a symmetrical triangle, an opening range, just a horizontal rectangle, right? And then get the break. Maybe there's a scalp for about 25 cents. It depends on how it unfolds, really. But maybe there's a scalp into 850. But because we're coming all the way from the bottom, breaking the resistance trend line, opening potentially on a gap, I wouldn't push my luck up and over 850. The only instance where we can be long over 850 on a break there is if we see incredible volume coming through. And what I mean by incredible volume would be sustained activity that's at least I mean, this is, to be quite frank with you, this is pretty pathetic volume in the first place, especially for a stock at this price range. I would need to see at least 1 million shares per 30-minute bar going through on a sustained basis for me to be confident in longs up and over 850. If it's not there, if we don't see the really large volume coming through on the open and remaining solid for at least the first hour or two of the day, I wouldn't really push it up and over 850, right? But if volume is there, your target's coming from here, the last swing high that we got, which is roughly $10 even, okay? So good volume, open in here, boom, that could be on the table. But based on everything we're seeing here, based on the fact that even volume here was just fairly pathetic, to be quite frank with you, on a stock this price range, I would watch for the gap and trap, right? Basically to fill down towards 710, today's high of day, quickly coming on over to the trade tab. You're not going to short it. There's no options chain, obviously, and there are no shares to short. So just avoid it if we start taking out the opening print and moving back towards today's high of day. Next up, we have GOOGL is trending. GOOGL, there we go. Google, obviously. What's going on the daily? Nothing too impressive. Move off the lows back into the bottom end of the balance. We discussed this in length over on the main channel video today. So this area of balance is really what you want to focus on. Can we accept within, or are we going to get a lower high here? So this to this for then an equal low. 3 touches, you know the drill. This one would actually be 4 based on what we have here. That sets up a flush point at 2,500 for much lower targets. Now, if we take a look at the 30-minute time frame, we'll turn off the extended hours and take a look at this in a better light. There's some interesting nuances that happened on today's session. First one is that the opening range held the lower high from yesterday. It's also the pre-market higher low, right? So actually, let's flip it on just so you can see it. I know we're going back and forth. We're all over the place. It's pretty tough to see because Google doesn't really trade great volume, but see the little dashes in here? That's essentially the higher low in the pre-market. So from here to here, and we hold that on the opening print. It's also, as I pointed out, the lower high from yesterday's session. So the fact that we hold that would indicate that short-term technical traders are in control. That's bullish. You see this little ascending triangle break out into the end of the day, then strong consolidation at the highs. To me, that's all bullish activity. It would really lend itself to breaking and recapturing this range here, maybe making the move to the top end, but we don't know what's going to happen. We don't know what will unfold at the 9:30 bell. And because we're literally sitting right at the level, it makes it a little bit more difficult to tell. Today's structure, again, it would point to bullish, but this could easily just roll over here, give us that lower high, and then it's back down for the equal lows in here. So it's one thing to think about, but watch how this 2663 resolves inside of Google. If we're above, lean on longs. If we start resisting and fall back down underneath that level early on in the session, start looking for reasons to get short. It might turn into a lower high from the daily time frame. So that's Google. Next up, we have NT, so NTRA. NTRA, there we go. And what's going on in NTRA, I believe the name is. Anything in the post market? Not really. Just a pretty volatile day on today's session. Large red volume, lower wick off of a gap down. Let's see. And again, you guys can let me know in the comment section what's kind of unfolding here, if there's a fundamental reason. But nonetheless, from the daily perspective, or sort of roadmap, if you will, there's nothing really about this chart that would suggest, hey, it's bullish here. And the reason I say that is because, sure, there's a long lower wick, but where are you going to place your stop loss? If you go long on this move here, and you're looking for the gap to fill, that's fine, but stop loss would probably go where? Underneath the low of day, right? So are you really going to risk a 1-to-1 just to make a little bit of change here? To me, it doesn't really make sense. I would wait for a cleaner setup, so something that works its way like this into an ascending triangle here on the daily. Then we crack it. You can place the stop underneath the support trend line, or even just back down underneath that 45 breakout point. As of right now, I'm not really seeing that, right? There's just no structure to trade based off of here. Now, if you're intent on going long this, which again, based on the daily trend also wouldn't be my first thought, but if you are intent on doing it, I would use at least like quarter position. And then if it starts working in your favor, you can add up and into the gap and add so on and so forth. I wouldn't go all in on this first initial entry just based on, thinking that this is quote unquote on sale, right? There's nothing saying that this has to move higher because we did see the gap down. So let's turn the extended hours off. And what we want to do on this time frame is take out the Fibonacci's from the high all the way down to the low, just get a sense for where we're at here. What you'll notice is that we did recapture the 38.2, that's bullish. We recaptured the 50%, that's bullish as well, but the 61.8 is the line in the sand, right? Usually speaking, if we can recapture the 61.8, that increases the odds of the 100% retracement. I don't want to say like tenfold, but it's very, very likely if you recapture the 61.8, you make that 100% retracement. So there's a couple things that could happen here that would turn this into a viable long setup. If we break it, then pull back and retest for a higher low, something that looks like this, fantastic. That starts to build out that ascending triangle that I was pointing out here on the daily with that higher low above the 61.8. And to give you a number, that's 38.37. Okay, so that's one bullish idea here. The other one would be, okay, we make it there without any pullback. I would then want to see something that does this, right? So just as long as we put ourselves in the situation where we get a higher low and equal highs, that makes the long setup a little bit more playable. Stop loss can go here, look for the gap to fill, and then maybe some after that. It just seems like a more technical setup, something where you know your risk. As of right now, I'm not really seeing where you place the stop anywhere underneath or anywhere other than underneath low of day, which doesn't make a whole lot of sense from that risk reward perspective. So that's what I've got for you inside of NTRA. Obviously, if we roll over here, that's going to set up the situation for a lower high, and you can look for the equal low after that if we flush the 38.2, which is roughly $34 even. Can we trade this to the downside? Yes, it is an easy to borrow stock, and the puts here are absolutely pathetic in terms of volume. I would avoid trying to short it via puts. Just use the shares. It's easy to borrow. Next up, what else do we have on our list today? We have CODX is the last one on the list. CODX, there we go. Co-diagnostics, old levels on the chart. Let's remove those. Start from scratch. What do we have on the daily in terms of a roadmap? There's your balance highs. There's your balance lows, rejecting kind of right at that level. You can see a little bit of an upper wick. We've closed right on the number, $5.65. So I would give this one a little bit of time to pan out. If we accept above, obviously you're looking for this to turn into a double bottom, something that looks like this. Longs are up and over the neckline, aka balance highs at 590. In that case, look left, poor structure on the way down. My first target would be up here, closer to 663. On the 30-minute time frame, what else can we learn about the price activity from today's session? Pretty solid day, right? 2 days in a row, to be quite frank with you. Nice pullback. There we go. There's the first flag. There's the second flag. This is the third flag with nice consolidation into the afternoon. We'll take out the fibs from the low up to the high, zoom in on this a little bit. What do you know? Just like that, we're holding the 50% or still above the 61.8. So anything that's kind of in this general realm strikes me as being healthy, bulls in control. From there, watch for the rotation into that 590 and then possibly a neckline break for a continuation. Now, because we've been aggressively up 2 days in a row, I would start to be a little bit careful if we take out that neckline, right? So to me, that probably becomes the more attractive long trade, getting it on the pullback as long as it holds that neckline break at 590 for then continuation through that poor structure, which we pointed out earlier on this ticker. So that's ultimately going to wrap up our quick fire round of the trending tickers today on StockTwits. If you enjoyed today's video or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description. And all of that being said, I wish you a green trading week.